Hi friends, small cap stocks are crashing like anything. There is an ongoing bloodbath in the small cap space right now. And to be precise, if you look at my screen, you will note that as of 24th of February when I am recording this video, small cap 250 index has crashed by almost 22.51%. Now this is a huge fall, and if you have small cap stocks in your portfolio, you might be sitting on heavy losses. Forget about small cap stocks. If you are a small cap mutual fund investor and if you have been investing in the last 1 year or so, the chances are that you might be sitting on heavy losses right now. And right now you may be scratching your head to find the answer for these three burning questions. Question number one is why small cap stocks are falling like anything. They are falling more than large cap and mid cap. And second question you might be thinking is, are we at the bottom of this fall because it's already fallen by 22%, or is there going to be more fall coming in small cap space? And the third question you may have is that does this fall right now make the small cap space very attractive from a long-term investment perspective, or should we keep away for now because there may be more fall coming our way? I'll answer all these three things with 100% data-backed analysis in this video. Every word I speak will be backed by data. Let the data talk. This is an extremely important video because every data insight will matter a lot for your small cap portfolio. Before I start, a big shout out to Odoo, the partners of this video. Odoo is a business management platform with more than 45 applications that will simplify and automate your business operations. For example, by using their invoicing tool, you can fully automate your invoicing processes, thus saving you a lot of time and cost. You can create invoices in just few clicks by either entering customer details manually or by typing GST number, and it will fetch customer details automatically. You can then add products and services that you are selling. You can add any specific timelines or payment terms you are likely to have with your customers, and you are done. The taxes are automatically calculated based on the selling price, making things easier for you. But the best part is that you can add bank account details, enabling the online payments. Once you're done, you can email the invoice or you can download it and manually send it. Through the dashboard, Odoo will show you the status of every invoice, and as soon as a payment is made, the status of that invoice is updated to be paid automatically. It can automate the entire invoicing and payment process so that tracking invoices is no longer a headache for your business. As such, Odoo provides multiple apps on one single platform, but your first application will be free for lifetime with unlimited support and hosting. If you want to transform your business, check out Odoo today. The link is in the description or in the pinned comments. Now coming back to our main topic, have a look at my screen. You will see that on 19th of February, small cap index made a bottom by falling by almost 24%. Now the way we are looking at this chart, it may mislead us to tell us that the bottom is here at 24%. After that, we are seeing slight recovery here, but please understand that this could be hugely misleading, because if I now draw another important pattern here, so let me draw that and show it to you. Have a look at my screen. You will see this is called the descending channel. What does this actually mean? This simply means that there is a heavy selling going on in the market in small cap indexes. For example, here the small cap index fell sharply. There was a slight recovery here, little bit buying here, but then again heavy selling, very heavy selling here. Small cap index dropped a lot. Again, there is a little bit of buying, then again followed by heavy selling, then small buying, then heavy selling again, and then small buying. But eventually, if you see, if you're buying at these points, you are still going to make a lot of losses. Why? Because this is called the descending channel. Please understand this very carefully, that we are in a descending channel when it comes to small cap index. Whether we have made the bottom or not, I will explain to you in the next 2 to 3 minutes of time. But let me now come back and tell you exactly why this fall is going on. For this, have a look at my screen. You will see Nifty small cap 250 earning per share. And what you will note here is that on 27th of September, this EPS used to be around 579 rupees per share. Prior to 27th of September, if you go back, you will note that EPS was continuously growing from here. If you see, every quarter, almost every month, the EPS is growing here very consistently, and that's where market was very comfortable with high valuations, because market was seeing growth in the earnings. But what happened on 27th September onwards is what you need to pay focus on. You will see that EPS started to drop sharply after the Q2 results started to come out. It dropped back to almost 550 level, 540 level, and then again started to fall back here. If you see, by the middle of January, 20th of January, it had already hit 508 level. Almost 12 to 13% of the fall in earning per share is what we saw between September to January. And now in the last 1 month or so, when the Q3 results have started to come, there is slight recovery in the earning per share, but it is still heavily down from the peak of 580. Now the formula for PE ratio is equal to price divided by earning per share. When your EPS is falling badly, then what happens is, even though your price may not increase, what happens is your PE ratio automatically expand hugely. That's why small cap index was at around 35 PE ratio, 36 PE ratio at the time of this fall. And that's why if I show you PE ratio here, you will note that in the month of December, the PE ratio was hitting all-time high of around 35 in small cap index, which is a very, very high PE. Earning per share is coming down, your PE is going up. That is never a KPI that investors want to look. And that's why precisely a huge selling started to happen in small cap index. Also, if you see Hang Seng index, which is representing the Chinese stock market, you will very quickly note that at the end of September, it was very, very down, 17,000 level. And actually a lot of money started to go out of Indian stock market and it started to go into Chinese market. We can see that here reflected from 17,000. This index has now gone to almost 23,000 level. On FI's selling, I have created a lot of videos already, but in this video, I'll also give you a flavor in terms of large cap, mid cap and small cap, where the maximum selling is happening by FIs. So I really hope by looking at this data, now you appreciate that earnings have come down, and that is why the small cap indexes or small cap stocks are falling. Why the earnings have come down? Very, very simply, if you look at this snippet, you will see that government capex was slowing down at the end of Q2, and that's where the problem has happened. Is it cyclic? Yes, absolutely it is cyclic. Are small cap stocks likely to recover? 100%. Again, I will speak about all of these details now in the upcoming segments of this video. Now comes the second very, very important question, that Rahul, are we at the bottom when it comes to small cap space, or could there be more fall our way? Let me now tell you three factors that we need to look at in a holistic manner, because one factor alone can never tell you what is likely to happen in the stock markets. The first factor is the valuations. As of 21st of February, Nifty small cap 250 index PE ratio is at around 27.6, and this is still a very, very high PE, because if you look at the 5 years average PE ratio of small cap 250 index, that stands at around 25. So right now the PE ratio is at 27.6. It is slightly higher than the last 5 years average PE. Now when the money will flow into small cap index is when this becomes undervalued, not even fairly valued. So at 25, if we say it becomes fairly valued, still the money may not flow in from a valuation perspective. But the moment this becomes, let's say 23, 22, then yes, of course, all of a sudden it becomes an attractive space and money might come in there, which depends on the liquidity. Let me speak about the second factor, which is the liquidity now. So there are two types of liquidity in the stock market. Number one is the DIs or mutual fund investors, and number two is the FIs. Now let me give you some mind-boggling data for small cap space when it comes to liquidity. Have a look at my screen. I went through 4 to 5 different reports from MFI's website and pulled this data together to tell you that SIPs are still going very, very strong in small cap space. Let me back this up by some data. Have a look at my screen. You will see that September 2024, the net flows into the small cap space were around 3,000 crores worth of investment every month. Now in the month of October, it went up to 3,700 crore. Although the market started to fall in September, but SIPs were strong. In November, it went up to 4,100 crore. In December, 4,600 crore. In January, 5,700 crore. The point is very, very simple. Although the small cap index has been falling, but the SIP inflows in small cap space has been continuously going up. There has been a pause slightly at overall market level in SIP that I covered in some other video. But when it comes to small cap index, the liquidity right now is still going strong. February data is not yet out. We'll come to see that. But right now, from a liquidity perspective, domestic liquidity perspective, I don't think there is any issue. Let me now speak about the FI's liquidity. We all know that FIs have been hugely selling, aggressively selling Indian stocks. But this data will tell you now, for example, here, out of 41 stocks in Nifty, which is around 82% of the stocks, FIs have been selling their stakes, while only 9 stocks, they have raised their stakes, which is only 18%. But have a look at the mid-cap space. That is very, very different. 44% stocks, they have increased their stakes, while 54% they have reduced. And now look at the small cap space. Here, in fact, 55% stocks, they have increased their stakes, and 45% stocks, they have reduced their stake. Meaning, the bottom line is that in small cap space, more number of stocks have seen the FI's inflows, versus the number of stocks that have seen the outflow. Again, I do not have the quantum of how much buy. I will love to go and find out and do some more research for you, and will try to add this in this video's description or in the pinned comments if I'm able to find that data. But so far, if you're liking this analysis, request you to hit the like button. Let me know in the comments a simple thank you. It motivates me a lot to bring such content for you at zero cost. The third factor which will tell us whether we are at the bottom or not is the earnings growth. What we saw earlier is that after the Q2 results came out, the earnings started to drop massively. Some recovery in Q3. Now it largely depends on how the Q4 results, which are likely to come out in the month of April, will dictate what is likely to happen in the small cap space. I cannot predict here what the earnings growth is likely to be in Q4, but it will largely depend on the government capex spending that we are likely to see. The data is likely to come in the month of end of, let's say, March or April. Secondly, Trump's tariffs have not yet played out into any of these earnings growth, and that factor is completely uncertain. Nobody can really predict what is likely to be the impact of Trump's tariff in the small cap space, and to me that is one thing that remains completely uncertain. Therefore, my view on small cap index right now is extremely cautious. I personally think that there is likely to be more fall. We have not yet hit bottom. There are still chances of more pain coming in small cap index. 8 to 10% more fall cannot be ruled out. It doesn't mean that we are likely to see 8 to 10% more fall. My gut feel is that there might be another 8 to 10% of fall coming in the small cap index in the next 2 to 3 months. So we really need to be cautious in this space. Again, it's extremely hard to project some of these numbers here because we don't know what the Q4 earnings are likely to be. We don't know what the impact on the tariffs likely to be on earnings of small cap space. Therefore, this space remains uncertain for now. The third question here is that, Rahul, since the small cap has fallen by around 22%, is it a good opportunity to now accumulate for a long-term perspective? Now, if you look at my screen, what you will note is that the current 22% fall, that is significant fall. And if you go back to, let's say, 5 to 7 years of history, you will note that it does not happen very, very frequently. In fact, last time we saw around 27% of fall in small cap index was back in 2022, 14% here back in 2023. So 22% fall is not very, very frequent. These things happen once in, let's say, 2 to 3 years of time. And definitely from a long-term perspective, these are good opportunities. But some of you may find 22% as a reasonable fall. But some of you might say that, you know what, we need to wait a little bit longer to see whether this can come down to maybe 30%, 32%, that sort of a fall. And that's where you might want to invest. Again, totally your call. This is not a recommendation from my side to now invest or not invest. But I've given you a lot of data-backed analysis here to give you a clarity as to what is exactly happening in this space and what is likely to be there in the upcoming months. Now, before I move to my last point, which is extremely important, that how to invest in small cap indexes when the markets are hugely volatile. Right now it is falling like anything, and whenever it is rising very, very sharply, what is the best strategy to go and invest in small cap index? I'll share that in a minute. But if you want to get these insights almost on a regular basis, you can consider joining my YouTube member community. This is the only way I currently teach because it is very, very practical. The feedback of this community has been excellent. Simply go to my channel, press on join button and be my guest, or you will find the link in the description or in the pinned comments. With that, let me now explain to you the investing approach in small cap indexes. So there are two routes. One is the mutual fund route and second is the ETF route. Now, whenever markets are falling like crazy, which is the case right now, or whenever the markets are rising very, very sharply, ETFs makes a lot of sense. Why ETFs make a lot of sense? For example, have a look at my screen. You will see the HDFC Small 250 ETF. Again, not a recommendation, not a promotion here, but let me show you something important here. What you see here is these very, very tall candles. Can you see these red tall candles? What they are showing is the daily movement of this ETF. So whenever all of a sudden the index falls by, let's say, 3% or 2% or 4%, during the day, actually it fluctuates a lot. And you might see this fall to be around 5% or 6%. And in my view, if you ever want to invest in small cap, when the markets are falling like crazy, then you might be able to find 2 to 3% of arbitrage in the ETF versus the index fund, because in the index fund, you get the NAV for the next day, depending on the cutoff time and when you put your money in. But in ETF, you get the spot price. The price that you see on exchange is what you are going to get. That is the beauty of ETF when the markets are hugely volatile. That is what is happening precisely. Also, if you look at the expense ratio of this particular ETF, again, go and check any other ETFs as well. The expense ratio is not huge, only 0.20. And to be honest, that is a very, very cheap way of managing your money. Secondly, before buying any ETF, please make sure you're checking the liquidity, which is the volume. So for example, here for this particular ETF, if you see the volume, they are very, very good. In fact, the volumes have gone up after 11th of Feb. All of a sudden, the volumes are looking like 16 lakh, 23 lakh, 12 lakh. It used to be around 4 lakh, 5 lakh, 7 lakh because of heavy selling that has kicked in since the 10th of February is why we are seeing the huge volumes. But higher the volume, better it is, because then you are likely to get your prices very, very close to the indicative NAV price. For example, here, if you see the indicative NAV of this particular ETF is 145.73 and the spot price is at around 145.67, which is very, very close. So again, this is a very, very good way to look at the ETFs. Again, not a recommendation here that you go with this ETF. You are absolutely free to go with ETF or index, whichever you are comfortable with whenever you want to invest in the small cap indexes. So in this video, I've shared a point of view. Let me know in the comments what is your point of view about the small cap space right now. Do you think that small cap space will fall more, or do you think we have made the bottom? I would love to hear your point of view as well, so that we can sort of debate it, discuss it in the comment section. Let me know in the comments what is your view. And lastly, big shout out to Odoo, partners of this video. Please check out Odoo platform. The link is in the description or in the pinned comments. In this panic market, stay calm, stay invested, keep rocking. I'll see you in my next video.